50 years ago this week, the U.S. went off the gold standard, costing our economy trillions of dollars of lost growth. And the bad consequences are not over. Trouble lies ahead. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. On August 15, 1971, President Nixon severed the dollar's link to gold. If after that fateful day, the U.S. had maintained the average rate of growth that it achieved the previous 180 years when it operated under a gold standard, we would have an economy today that would now be at least 50% larger. Ponder that for a moment. The typical pre-pandemic American household income would have been $100,000, not the actual $66,000. From the 1790s, when the dollar was first linked to gold, to the 1970s, when that link was sundered, there had been interruptions because of major wars and a devaluation during the Great Depression. But it was always understood that the dollar's ultimate value had to be linked to the yellow metal. Why? We all know markets work best with fixed weights and measures. The size of a gallon of gasoline doesn't fluctuate each day, nor do the number of minutes in an hour, nor the number of inches in a foot. They are all constant. Money is a measure of value and works best when that value is stable, just like those inches in a foot. For a variety of reasons, gold keeps its intrinsic value better than anything else on Earth, and has for 4,000 years. In that sense, it's like a yardstick. Not perfect, but the best we have. When you see the gold price fluctuate, what you're seeing mostly is the value of the particular currency fluctuating. Gold is the constant. Economies can't grow without investment, and you get more long-term productive investment when the value of money is not constantly fluctuating. Investing is risky enough, but if you don't know what the value of the dollar will be in the future, time horizons shorten, hedging and currency speculation become endemic. The average daily turnover of currency trading is now over $5 trillion. The myths surrounding the gold standard, it causes depressions, agricultural distress, teenage acne, you name it, are numerous and false. The gold-based Bretton Woods system that was created in the closing days of World War II and blown up on August 15, 1971, had worked remarkably well. The U.S. prospered, Western Europe and Japan boomed, quickly surpassing pre-war levels of production. Actually, the closing of the gold window on August 15, 1971 was meant to be temporary. But unfortunately, our leaders and most economists back then didn't understand the basics of a gold-based system. They didn't know how to manage it, and their heirs today are even more clueless, which is why we're in for serious monetary disturbances in the months and years ahead. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.